Hello, everyone. All right, let's dive straight into Bigbear.ai. The stock has been making waves again, and right now, we're seeing it tick higher by a little over 2%. That might not sound massive on its own, but in the broader context of what's happening in the markets this week, it's actually very significant, especially with the Federal Reserve meeting taking place, where all eyes are on whether we're going to see any cuts to interest rates. A move like that could shake the markets in either direction, and it makes Big Bear's momentum even more interesting. Currently, Big Bear is trading above the $6 mark, which is a price level that has been acting as both resistance and support over the past several sessions. If you've been following along, we've been watching this stock for a reversal pattern. The setup has been fairly classic. The stock made a push from the lows around $4.65 earlier this month, gradually built strength, put in higher highs and higher lows, and then finally broke through that $6 ceiling. Yesterday, we pointed out that $6 would be the critical level to watch. And just as expected, once it broke through, that old resistance turned into support. We saw that play out not only yesterday, but also again this morning when the market opened. Now, in terms of trading action, it hasn't been a straight lineup. We've had dips along the way. Some people even had opportunities to grab quick trades on those pullbacks. For example, earlier today, right at market open, Big Bear pulled back about 5%. If you had jumped in at that dip and ridden it back up, that would have been around a 7% swing, which is excellent for short-term traders. Even though that trade didn't work out for me personally, I'm still focused on the bigger picture here. Because while those intraday swings are fun, the real story is how Big Bear is positioning itself for the weeks and months ahead. If we zoom out a little bit, this move isn't happening in a vacuum. Since last December, when we started covering Big Bear more closely, the stock has had a fascinating trajectory. We first got interested when it was trading around the $1 mark in October of last year. By February, the stock had skyrocketed to around $10 per share. Of course, it couldn't hold those levels forever, so it sold off into April alongside the broader market. From there, it staged another recovery starting around 2.36, climbed back up into June, and then over the summer reached as high as $9. That was when conversations around Big Bear really started heating up. People were asking, why is this company suddenly getting so much attention? Why all the momentum? The hype cooled after that summer run because earnings rolled around and the stock sold down again. This is typical with high-growth but unprofitable companies. The financials tend to spook investors. And with Big Bear, there were definitely some ugly numbers at first glance. But here's the important thing. When we look deeper, there's more going on than the headlines suggest. For example, let's talk about that infamous negative net income. On paper, the company reported losses that looked catastrophic, over $200 million in the red. That scared a lot of people, and I remember seeing comments everywhere saying, "That's it, Big Bear's done." But seasoned investors know better than to just skim the headlines. What some of the smartest voices in the community pointed out was that a huge chunk of those losses were accounting adjustments, things like goodwill impairment from past acquisitions and derivative liability valuations tied to warrants and options. These aren't cash losses. They don't mean money is actually leaving the company. They're paper adjustments. When you strip those out, the real net loss was closer to $10 million, not to $28 million. That's a massive difference. And it also changes the story completely. Because instead of looking like the company missed earnings by a mile, the adjusted loss per share was just 8 cents, only 2 cents worse than Wall Street expected. That's basically a rounding error when you're talking about small-cap stocks in emerging industries. On top of that, Big Bear actually increased its total assets to around $600 million and added more cash to its balance sheet. That's not the profile of a company that's about to disappear. Now let's connect this to the big picture. Why are institutions like Goldman Sachs still doubling down on Big Bear, even after shaky earnings? It comes down to government contracts and the broader AI defense theme. Remember, this isn't just another AI company chasing hype around chatbots or image generators. Big Bear operates at the intersection of artificial intelligence, Homeland Security, and defense technology. These are areas where government spending doesn't move in small increments. It comes in waves. One contract here or there might not look like much, but when the right bill passes in Congress, or when national security funding ramps up ahead of events like the Olympics or the World Cup, the dollars start pouring in. And here's where Big Bear has a real ace up its sleeve: leadership. Their CEO, Kevin McAleenan, isn't just another executive with a tech background. He was the former acting secretary of the Department of Homeland Security and a commissioner for U.S. Customs and Border Protection. That kind of experience and network is invaluable. It means Big Bear isn't just pitching AI solutions in the dark, they're sitting at the table where decisions are being made about TSA security, port monitoring, and national infrastructure. We're already seeing the results of that positioning. Big Bear's VeriScan technology is being deployed in major airports like Denver, LAX, Chicago, and JFK. This isn't a concept or a beta product, it's real, and it's in use. They're also expanding into areas like the Panama Canal, which is strategically critical for trade and defense. Add in their contracts with the Department of Defense, Homeland Security, and potentially more Pentagon-related deals, and you start to see why investors are treating Big Bear as more than just another speculative AI stock. Now, could the stock still pull back? Of course, no stock goes straight up. Right now, $6 is the key support level. If that breaks, we could see a retest of $5.50 or even lower. But as long as the stock holds above $6 and continues its uptrend, the bullish case remains intact. The real test will be whether Big Bear can push into that $7 to $10 range again. If their backlog of contracts converts into $50 million or more in quarterly revenue, that scenario becomes very realistic. And this brings us back to the bigger theme. Big Bear is not just a speculative play on AI hype. It's an AI company operating in one of the few spaces where government funding is almost guaranteed to grow. Between national security concerns, global events like the Olympics, and the steady push toward modernizing ports, airports, and borders, Big Bear is in the right place at the right time. So here's the bottom line. Short term, expect volatility. Traders can ride those swings between $6 and $7, maybe even higher if momentum picks up. But long term, a Big Bear has the potential to establish itself as a serious player in AI-driven defense and security. And that's why we've continued to add to our position, even when the headlines look scary. Because sometimes the real story isn't in the headline numbers, it's in the details hiding underneath. Subscribe to my channel. This is not financial advice.